Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli on this day with the bulls firmly in charge. Let's have a look at where the CBO 200 is tracking as we finish out the day's trade. And after we saw records once again on Wall Street overnight with both the Dow, or all of the Dow, S&P and NASDAQ all hitting those records. While we wait for the CBO to come up, I will just tell you what's happening with the ASX 200, which is up 1.2%, I should say, 89 points, 7,784. Right, so let's get to the three themes. It really was all about the bulls being in charge today. We saw that straight out of the gate with that positivity coming through from Wall Street. After Fed Chair Jay Powell did indicate that, yes, they're pivoting to cuts. They will see 3 this year, which is certainly what the market is pricing in as well. But of course, down from the previous pricing that we'd had late last year as we continue to see sticky inflation. Here at home, jobs jolt, unemployment nearing a 50-year low of 3.7%, with about 116,000 jobs created in the economy in February. Now, I'll speak to Bourne Jarvis from the ABS earlier. He was saying, look, a lot of it is trends and seasonality, given that you do see fewer workers or fewer people looking for work in December and January. And remember, we saw that decline in jobs in the month of December. A little bit of a pickup in January, but certainly not like the big rise that we saw in February. But of course, it is something that Michelle Bullock and co are going to have to look at closely, because the RBA has that dual mandate of reining in inflation and also full employment. And go Aussie go, the Aussie dollar just continuing to rise on the back of all of these factors. Certainly the US dollar got whacked overnight on the Fed pricing expectations and the dot plot projections. Nick Twidale was talking to me earlier about the fact that you can continue to see Aussie momentum. And of course, don't forget, one of the key trades of the week, as well as we've been focusing in on the BOJ as well, is that Aussie yen cross. And Nick was saying to me that is the currency pair to watch, the Aussie yen. All right, let's have a look at some of the sectors for today. It was all green on screen, really. The bank's looking really good, NAB up by 2.5%. You can see all of the big four looking solid today. The interest rate sensitive REITs as well. Let's have a quick look at those. The likes of Goodman Group, Charter Hall, all tracking higher. We're also looking at some of the consumer discretionary players. Wesfarmers there, Aristocrat, JB Hi-Fi. I mean, it's really hard to find a stock that isn't doing well today, which is what we like to see. So let's get you into some of the corporate stories as well. Here we did see Brickworks, coming under pressure. It did see a loss of $52 million in the first half. A lot of that attributable to writing down property valuations. When you strip out those write-downs, Brickworks actually swung to an underlying loss of $37 million. Sales were down 6% to $547 million. Sigma Health, meanwhile, saw same-store sales climb 9%. I've said that about 3 times today, and I can't even blame anyone else because I wrote that. I don't know why I put so many S's in a row. Net profit climbed 149% to $4.5 million, which included merger transaction costs of $8.2 million. And Strategic Minerals was up 20%. It said the US government agency may fund its rare earths project with debt up to $600 million. Let's get now Mathan Somasundaram from Deep Data Analytics View. So many things to touch on, but let's, I guess, start with the big one, the Fed, and what you thought from Jay Powell, indicating that we could see 3/4 point cuts this year.
Yeah, they pretty much held that view the whole through pretty much the last 12 months. Since the end of the last year. And I think it's pretty much set in stone. The market had an optimistic view that's been cut back. I think it's interesting because the data is, the economies are holding up quite well because there's a fair amount of stimulus. And despite all the talk about tightening, the Fed has indirectly kept liquidity higher for about 6 to 7 months. So hence why the market's running, and there's a fair amount. I mean, you can, it's a matter of time before monkey JPEGs come back to the market, because there's a fair amount of liquidity running around. So that is creating asset prices to go higher, and the markets are getting well supported. But on on the flip side, that's probably going to play into inflation. And so he did upgrade the growth expectation slightly and also upgraded inflation expectation slightly. So it is a fine balance. The Fed is trying to do the soft landing after inflation going at extreme levels. And history suggests that they will struggle, and I think they probably will. But in the meantime, the market is pricing in a fair amount of expectation into most sectors.
And what did you see in terms of the overall market momentum, Nathan? Because I mentioned the bulls in charge. You know, you've certainly got the dollar being hit, stocks being bid up in both the US and here. Bitcoin's on a run, so is gold. What are you looking at?
Yeah, it is one of those weird cycles. We've manipulated so many asset classes that everything is running, and nobody knows what is supposed to be. Because back in the day, you know, when times were simpler, when equities struggled, you buy fixed income. When fixed income struggled, you buy equities. But it's completely out of sync. So I think it was interesting because the trend is that right now the flow of money is what matters, and where the global funds, especially the passive funds, are doing. So every inflation update, every US Fed update, every non-farm payroll update generally is a positive day. So it doesn't matter what the data is, because we've had the last 2-3 months, inflation beats expectations and the market goes up. So on the day, it gets pumped up. So I wasn't surprised that the market was up last night. And it was a classic tech bounce. If you look at the best performing sectors, it was tech, retail, and communication, pretty much all the mega techs. So that's been the area that's used to pump the market. Similarly, in our market, it's the banks. Since the iron ore started to roll over, it's been the banks that's been driving the currency trade. So as the currency bounced, I can see that bouncing. But look, if you look at what's happening in the gold space, if you look at what's happening in, I guess, the yield space, so the yield started to come off. Gold is at all-time high, whether you're looking at it in US dollar terms or Aussie dollar terms. And oil prices are bouncing as well. So there's a lot of things moving. Everything can't be right. So it's going to be interesting to see how it unwinds and resettles over the next couple of months.
Indeed. Nathan, your thoughts as well on what we saw with the jobs data, because as we know, the RBA has this dual mandate, which is different to what the Fed has, which is its main goal of reining inflation. We've got that. We've also got this full employment that they're trying to get. I mean, unemployment at 3.7%. How worried do you think the RBA is at the moment?
Yeah, the only way is up, isn't it? I mean, if you look at the last 50 years, we're at historical lows. I mean, apart from pre-GFC and the last couple of years where we've had extreme stimulus, unemployment only bottomed around 5%. So we are substantially lower than that. So our economy is running on a fair amount of handouts and stimulus, and employment is extremely high. So it's really hard to see how RBA is going to be cutting rates anytime soon. I think that's pipe dream at the moment. Unemployment needs to get closer to 5% before it gets spooked and RBA starts to move. So I think RBA, the employment data, I don't think was a real surprise. I mean, think of all the small businesses. You can ask any of them. Nobody hires anyone in December or January. That's just a dead month. So if you're going to hire people, you're hiring them in February. So that kind of comes into play. So there is a certain seasonality to it. But you can look at the average over the last 12 months, and it's extremely high. I mean, if you look at, when you compare it to the US, when you population adjusted, we should be doing something around 15,000 jobs per month, and that's pretty good. And we're averaging probably somewhere around 20 to 30. So it's actually quite strong over the last 12 months. So I don't think there's really a driver for the RBA to jump on and say we should cut rates. We've got asset prices that are all-time high. Employment is very strong, and inflation is still above their range. So I think the short-term view on rate cuts are going to get pushed back. But I didn't think they were going to move ahead of US Fed anyway. So US Fed at the moment is flagging somewhere around June, July, and that's probably going to get pushed back. So RBA is probably late this year at best. So it's going to be interesting to see how inflation picks. And I think the biggest worry for RBA, I mean, the job market is strong globally, and that's been a problem. And immigration in most Western economies has been pretty high, and that's driven consumption as well as job market. So that's going to be a tough play with energy going up. inflation is likely to pick up over the next 3 to 6 months. And that's going to be where the central banks are going to struggle to work out what to do.
Indeed. I don't envy any of them. Mathan, thanks so much for joining us on the COB. All right, the stock of the day was Washington H. Sol Patterson, stock code SOL. Michael Gable from Fairmont Equities and Howard Coleman from Team Invest gave us their take.
Chairman, terrific board, great management, and they, never going to shoot the lights out, but they're the kind of investment that if you hold in your portfolio, you can be very happy with.
Which means you would do what with the stock?
Well, at the moment, it's probably a little bit on the... no, in fact, its PE is not even all that high. Probably it would fall within where Team Invest members at the moment would be quite comfortable buying it.
At the end of the day, if you were in the business of buying one of these type of companies, I think Sol Pats is in the top sort of 2 or 3, on the market. As we saw in their presentation today, an investment in Sol Pats over the past 15 years has outperformed the accumulation index. So, that's really all you can ask for. Great set of numbers. So, it's a buy if you're into, buying these asset managers or fund managers. I think, Sol Pats is one of the few that you'd buy.
Okay, let's have a look at the leaders on the day. Webjet held an investor briefing today. It seems that investors liked it, up 9%. A lot of the gold stocks looking really good as well. Telix Pharmaceuticals up by over 6%. To the downside, we saw weakness coming through in IGO, Virgin Money UK, Spark New Zealand, New Hope and Brickworks after its results. In the small end of town, Austrat Materials up 20%. Namoy Cotton, Silver Mines, European Lithium and Firefly Metals all had a good day. To the downside in the small end of town, Newfield Resources, Appen, Challenger Gold, Clover and Impedimed all lagging in that space. I also just want to keep you up to date with what's happening overnight, and it is Central Bank Christmas early week, if you like. I wrote about that for The View today as well. Central Bank watchers in paradise this week. We've had the BOJ, the RBA, the FOMC. Now we've got the Bank of England, also Swiss National Bank and Norges Bank all handing down their decisions. Unemployment data, this is really the initial jobless claims rather than unemployment data, but just seeing those people that are lining up for unemployment benefits. Home sales also coming through, and a number of companies coming through with their earnings, including FedEx, Lululemon and Nike. And tomorrow we will be looking out for the RBA Financial Stability Review. Worth noting, at the media conference this week, Michelle Bullock noted that several times, particularly when she was asked some tricky questions. She was saying, you will find out in the Financial Stability Review. So we'll be passing over that. We've got New Zealand trade balance, Japan's CPI, and in terms of stocks going ex-dividend, VLS, which is Vita Life Sciences. But just getting you caught up on where the market is tracking at the moment, it is a positive day. 17 points higher on the CBO 200, the ASX 200 up 1.1%, 89 points, 7,784 points. Really hard to find any losers today, and particularly when you look at sectoral gains. Across the ASX 200, every sector tracking higher apart from a small gap in utilities. All right, that does it for today, Thursday. We'll be back bright and early from 9:40 a.m. Eastern tomorrow. Thanks for your company. We'll see you then.